welcome back to this week's market update. Today is Friday, June 30th, 2023. This is Kelly coming to you with a week full of updates, so let's get right into it. As we close out the month of June, the second quarter, and the first half of 2023, we've seen equities in still strong positive territory, so that's great news, right? As of June 29th, the S&P gained about 4.2%, the NASDAQ was up about 3.7%, and the Dow Jones Industrial Average was up 3.2%, with some more gains here on June 30th, Friday. On the same time period, we saw the 10-year U.S. Treasury yield gain about 6.7%. So we saw June was a positive month, but where are we year to date? And so I just pulled a chart right here. You can see the NASDAQ, obviously tech heavy, has completely ripped away almost 30% gains so far this year as of June 29th. You can see the S&P still up almost 15%, probably broke that today as of Friday. We're up so far. Then you could see that the Dow is up just slightly positive, as well as the 10-year U.S. Treasury yield. A lot of positivity in the markets this year, a very different story than 2022, but we will continue to monitor and adjust accordingly. Shifting gears into some more actual economic updates of the week, we got consumer confidence here for the month of June, and it jumped 7% since the May data. So big movement in consumer confidence, and I think that's most interesting because of what was causing it. So we saw both consumers' feelings on their current situation as well as their expectations for future economic conditions. Both of them increased quite significantly. So consumers are feeling like they're doing okay now and they feel like they'll do okay in the future, which is just definitely really important to keep in mind in looking at different companies and different investments and different portfolio strategies. We like to keep these data points in mind and just see how the consumer is doing. And so just for some more perspective, this is the highest consumer confidence since January of 2022. So before we had, terrible 9% inflation in the CPI and a lot of Fed rate hikes and a lot of other things going on since January of 2022. Big shift there, and we will continue to monitor it very closely. Also this week, we got new home sales data for the month of May, came in much hotter than expected, actually 14.2% higher than expectations at 760,000 new homes sold in the month of May. This amounted to a median sales price of $416,000 there, and you can see we've been a really strong uptrend ever since about mid last year. I also found it interesting that this was a 12.2% increase just from April's data in the amount of new homes sold and a 20% increase from 1 year ago in May of 2022, even when mortgage rates were much lower then. Really interesting how one of the most interest rate sensitive markets, or what normally is, has yet to take a significant hit from these 6, 7, 8% mortgage rates, and we will continue to monitor it and see how it reacts accordingly. Just as we thought that the manufacturing industry was taking a downturn, we got a really hot durable goods orders report again, and so economists were expecting actually a monthly decrease of 0.2%. However, May orders jumped to $288 billion, or an increase of 1.7% in just 1 month. So hot durable goods orders, and this was led by an increase in non-defense aircraft as well as defense capital goods orders. Some more unique items in what was driving it, but still really important to know as we look comprehensively at the economy. So like I was saying, this week was full of economic data, and many of that data brought surprises. And so one of those surprises was in the initial claims data, where we saw claims for the week ending June 24th fall to just 239,000. You can see pretty low right there. Not totally out of trend, but that is a big drop from last week's 265,000. Also much below the 4-week moving average of 257,500. Is this a possible just an outlier in employment data? Are we going to see an uptick next week? Or is this an actual trend breaker in this trend that we've seen since about late January, early February? We're not sure, and only time will really tell with that, but really important stuff to look at as we tell how the consumer is doing and how we adjust portfolios accordingly. Friday morning, we got personal income, spending, and savings data for the month of May, where we saw personal income jump about 0.4% from April, which is pretty strong growth in income, while personal spending only rose 0.1% in the same time period. Similarly, we saw consumers increase their savings rate to 4.6% of their disposable income, so a bit of a jump from last month, and we're just seeing consumers becoming more aware of the economic conditions. They are becoming more conservative in their spending, they are making slightly more, and they are saving slightly more, so positioning themselves for some economic uncertainty to come, so it'll be interesting to see how this changes if the economy actually takes a serious downturn. Alongside that really important personal income, spending, and savings report, we also got the PCE inflation data for the month of May, which wraps up the May inflationary data for the entire month. We saw headline PCE come in at 3.8%, so a fair drop from last month, while core PCE came in just slightly cooler at 4.6% year-over-year inflation. So both of them were down from April, but still nowhere near the 2% goal. On a month-over-month basis, PCE in May was flat, while core PCE came in at 0.3% month-over-month increase. We're seeing PCE and other inflationary data points that have come a long way since 1 year ago, where CPI was peaking at 8.9% in June of 2022, but we still are not near that 2% goal. So I'll go into where we are with the Fed and how they're reacting to this data in the next slide. Like I was just saying, the fight against inflation is nowhere near done, and so you can see the rate futures and the rate probabilities for the next Fed meeting have adjusted accordingly. As of June 30th here, the probability for one more rate hike in July is up to 87%, just about here, and that's only been increasing over the last few weeks. Lots of economists are believing that we're going to see at least one more, maybe even two, by the end of the year of rate hikes as we really get close to tampering down on inflation. It was a crazy week full of economic data and surprises, as well as the end of Q2, the end of June, and the end of the first half of 2023. So busy week here. We will continue to monitor all of these economic data points and markets as we continue to manage throughout the year. So thank you for tuning in, and we will see you next week.